Brendan Kennedy, CEO of Tilray, announced that they put over $300 million into Manitoba Harvest to acquire it. That's a big deal, and we're going to talk about it today on Eric Smart Live. If you're interested in the cannabis industry, if you're interested in the business, the market, the products, this is the podcast for you. So today we're looking at an acquisition by Tilray of Manitoba Harvest, which is a food producer using hemp as a primary ingredient, and CBD, which is a hemp derivative. Brendan was on CNBC, and multiple outlets were reporting about this deal because it's a lot of money and puts actually Tilray in for over $500 million into the CBD market in the U.S. And that's a big deal because that's a lot of money. And it's a bifurcation of what their original strategy was, which was focusing on the intoxicant side of the cannabis industry with the marijuana and legalization in Canada, where they're based, but also state by state in the U.S. So they're taking a presence in the hemp market here in the U.S., along with Canopy. So Canopy is the largest of the big LPs that are also listed on the public markets. In the case of Canopy, it's on the New York Stock Exchange. In the case of Tilray, it's on NASDAQ. Both of them have extremely high valuations. Their market cap's huge compared to their revenue, but they have a lot of cash. And in the case of Tilray, they're backed by privateers. So that's Peter Thiel's basically investment vehicle into the cannabis industry. When you look at this, what it really is talking about is distribution. So Manitoba Harvest is in Costco, all the major retailers out there. So it's a supply chain. It's in hemp-based products, and specifically getting access to more CBD. I'm sure Manitoba has a good supply chain in that. Tilray is going to plug into that, and they get distribution. The problem is, and why it matters, is because this is a food-based company. The FDA came out with a statement in December saying that it is, looking at the CBD market and hemp derivatives, and it now has the authority and the mandate to oversee it post the 2018 U.S. Farm Bill. It did not give any guidance, but it did have a bit of a warning for food and dietary products, specifically dietary supplements. Anything oral, basically, the FDA is concerned about. So when you look at Tilray doubling down on food, that's interpreting pretty loosely what the FDA is going to do. It's taking a pretty laid-back stance in what concerns it has around the FDA regulating it. Where it could go: food and dietary supplement, prescription medications. So we already know there's prescription medications in the market, specifically with Epidiolex. GW Pharma released that last year. But there are other categories, and the highest category outside of commercial pharmaceuticals is what's called OTC, over-the-counter drugs. So when you go buy ibuprofen, Tylenol, those are manufactured to OTC standards. That would be bad for Tilray in this case if that's where the guidance landed and there's a monograph issued by the FDA for CBD that required OTC-type manufacturing and categorization of products. That would definitely rule out food. We'll see where it goes, but it's a big question mark for Tilray to take that kind of risk around it. Maybe they have enough cash where they're going to disperse or have a wider range of deployment into the market across product classes and across manufacturing capabilities. Certainly their deal with Authentic Brands, which came in at over $250 million total, $100 million up front. If they're making products for them, they could manufacture to that standard. I think they're focusing on a foot cream with 9 West to begin. Who knows where that could go? Authentic has over 50 brands, so there's a lot of licensing capability there. I'm sure they've got multiple deals in that, and probably more around cosmetics. I know Juicy Couture is one of the brands in Authentic's portfolio. They already make some cosmetics. That would make sense to get into that type of product. Outside of that, it's still anyone's game. They have all the money. There's 5 large cap stocks that are cannabis publicly traded companies that have tremendous advantage because they have so much cash. There are smaller, publicly traded hemp-derived CBD companies out there. CW, Charlotte's Web, is one of them. CV Sciences, both of those are not nearly as large as the large cap cannabis companies, but they have some cash. They have positive cash flow, which is a big advantage. They have decent market penetration. But it goes back to what are their core products, what are their manufacturing capabilities, what are their focuses. If they're going loosely, interpreting what the FDA is going to do and not taking a much stricter potential perspective on how the FDA is going to react. They're focusing on dietary supplement type products, orals, and that's a risk profile. We'll see what happens over the next months. And certainly I expect by 2020 we should see this tighten up quite a bit by the FDA if we don't by this year into 2019. Still anyone's game, so stay tuned. We'll keep covering it, and we'll see who the winners come out to be. Thanks for joining.